Hey, so I kind of hinted at doing this. I don't know, it's a half-assed job, but that's the way I do things, right? Um, I love 18xx games. Don't get me wrong there, but I want to do kind of a critique, mainly focused on 18xx games, but also to some extent maybe all train games that are board games and all economic games that utilize stock markets and stuff like that as kind of a whole, because I feel like that model has not been appropriately handled in anything. By appropriately, I mean really realistically handled. This is probably along the lines of people who gripe about power grid, because that's not exactly how the power companies work, but it's a nice intuitive model. And I feel like, 18xx gives you a pretty good playable mechanism, and so do some other games. Some of the Winsome games may actually give a better model. I don't find them as enjoyable or as much fun to play in the same sort of way, but that may have more to do. I'm not sure. That may have more to do with a couple of things. One is my familiarity with XX, and that most of them follow a pretty strong current. Yeah, there might be exceptions here and there that bubble off, but and we'll touch on some of that. But also that those Winsome games in particular, and I'm going to include things like Chicago Express in that because they feel similar, and Baltimore and Ohio, which kind of does a mixture of things. They may do things that I think are a little closer to the reality, but they feel almost too stripped down, in a way. There tends to be a richness to a lot of the XX games. Maybe not all of them. There are, I'm thinking here things like 18AL and GA, which still feel kind of like a watered down 1830. So they're not. I still think that they're richer in some ways. But anyway, I want to touch on some of the issues that I've noted about, and I mentioned this while I was playing Pocket Train Game, which is a Jonas Jones game, very much 18xx based, but with some of his own twists in it that are kind of interesting, and I want to look at some of these ideas. So I think the first thing I want to look at is the stock market and the shares and stuff like that. So the first thing that I hit here when I think about it is that stocks are not usually valued on what 18xx values them on. 18xx in general says if you pay out, you go up in share value. It doesn't really have any impact to do with how rich your company is or whatever. And if you don't pay out, your share value drops. Doesn't really matter the reasons for that. And what I was thinking there is, well, stock valuation theoretically should be tied to the price to earnings ratio. Now, I think some of the Winsome games, it's been a long time since I played these, handle that relatively well, in the sense of, oh, how much do you earn? That is just your stock value, and it just keeps going up and up and up. And it's, how big your company is and how good it is just going to boost your stock value. And that, I think, is like the price you pay from the company if you want stocks. and it's the amount, it's the amount that they're worth at the end of the game. So what you want to do is you want to invest in something that's going to grow. And it's the same with any of the games. But in 18xx, a lot of times you're relying on the dividend payouts, whereas in the Winsome games that have dividend payouts, that is generally like an option that that the president of the company has, is to release some of the cash that they have stored up, which can be used to build rails and whatnot. But they just, hey, I got too much cash, here, I'll pay it out to the investors. I may be simplifying things. Again, these are things that are kind of formed in my head. Now, the particular game that I was looking at that kind of triggered me on this and led me to say, hey, there's a lot that I feel is done wrong in 18xx, and I look at it, right from the beginning I would look at it. So, for example, with 1830, which was my first 18xx, shares that the company, so there's two kinds of, there's shares in three different places in 1830. One, it's in players' hands. And when it pays out dividends, it gives the players those dividends. There's shares that are in the initial offering. And the argument in 1830, they pay back to the bank in 1830. The argument in 1830 for that is that that's because you're fully capitalized, that's money that the bank is loaning the companies. And so that's being paid as debt service. But then there's the very weird case of shares that are in the bank pool, which presumably are owned by the general public. And those pay into the company treasury in 1830. And that just feels like an absolutely incorrect model. I'm getting kind of weird because I'm talking I went off in one direction and then I just took a sharp turn there. Let's continue with that sharp turn because I don't know that I have that covered in my little notes here. Some 18xx games, though, say, okay, I'm looking at 1856 here, and I loved 1856 for doing this. If the company is partially capitalized, then it holds the shares that are not sold to the players. And what that means is it collects the dividends from those shares. And then it also has shares that are in the bank pool, which are in the general public's hands, don't get paid to anyone. And when you go to full capitalization, essentially there are no shares, I think, in the bank pool. That would be the right way of doing it. I'm not positive if 56 does it that way. It's been a while since I played it. It was my favorite 18xx at one point. Back when there were very few. At least very few available to me. So kind of the idea there is the fully capitalized company would essentially dump all of its shares into the bank pool. And either the bank or other external investors that aren't players are holding those shares and the company's not. But it gives it access to all the money. And again, this kind of model, 2038 uses kind of a mixed model as well. Others use just partial capitalization across everything. All kind of stuff like that. But none of them really feel completely correct. You know. Anyway, what I wanted to get to was that price to earnings thing, because the Jones game that I just played kind of addresses the price to earnings idea, which is your stock value goes up if you pay out at least, if you make a run and pay out at least half your stock value. It's at least taking that into account. And then, like many XX games, it also takes into account the, maybe not all that many, but a fair number of them. It takes into the account that if you pay out some multiple of your total share value in dividends, it goes up more than just one box. Okay, that all makes some sense, but the problem I have with that is that stock valuations aren't really based on dividends. They're affected by dividends. I'm not going to deny that. If you pay out a dividend regularly, it is going to impact the price. But the main factor is how much does the company earn? How strong is the company? And you can have companies that are worth a shit ton of money in an XX game that nobody would want to touch because they're on the verge of bankruptcy. And I'm not saying that kind of situation doesn't exist, and in fact, it may be particularly appropriate in 1830, for example, a game in which raping companies and leaving them stranded and whatnot, when you have situations like credit mobilier and stuff like that where stock values were inflated unreasonably. You can make the same argument about the dot-com bubble and what we may be facing now. The dot-com bubble was so interesting because, like, WorldCom spent a fucking fortune, went into huge debt, and then went bankrupt, ended up building the infrastructure that we needed. Like, it did what we needed, but it was all kind of an unsustainable mechanism for doing it. Kind of the capitalist version, I guess, or the runaway capitalist version of what a government should be doing, which is building out the infrastructure that, anyone in their right mind would say, yeah, that's just not going to make that kind of money, And so on pennies on the dollar, people were able to acquire what WorldCom built. Anyway. So what I'm thinking is something that doesn't just rely on paying out dividends. It would rely more on the apparent valuation of the company as what the outside investors would be willing to pay for it. And that would be tempered, much like the stock market in 18XX, especially the two-dimensional ones. It would be tempered by, hey, how often is it paying out dividends? How strong, what is its actual price to earnings value? That would be one factor in it. What is its history of making dividends, which might modify that a little bit. And basically, that price to earnings, like the dividends would continually raise the value, but that price to earnings itself would be something of an anchor, which would drag the price of the shares up or down, maybe some percentage of the way towards it. That's not to say there wouldn't be arbitrage situations available. There should be. Now, for the big investors, things are totally different. In particular, if you're playing as a consortium of major investors as a single player, That might be one good way to look at the players in an 18xx game or a Winsome game. You're probably not looking at a single huge investor, although certainly some companies and whatnot would be controlled by, by a single person for the most part. Usually it's a consortium of people who own it. And unless you had a very large play group, not the 6 players that is kind of the limit in an XX game usually. It doesn't really make sense to say this is all the big investors. It makes more sense to say these are groupings of big investors who are willing to float a certain company. If you look at most of the big rail companies, they're usually floated by a few people, and there's often wasn't a lot of interlocking between the different corporations unless they were actually tied together in some way. But the prices that they paid were, first of all, kind of the initial offering. Makes perfect sense. I've got the initial offering. I can buy however many shares I want. It's my company, whatever. But if I want to try to raise more capital, I have to kind of float the company in the stock market. Now, I would argue that you should be able to run most of these companies as privately owned within that investor consortium, where shares aren't even available to everyone. And that the players can kind of agree, if they own all the shares of a company that are extant at that point, they could agree, okay, I get another share for $10 or whatever, where you just put your own cash in at whatever rating you like, essentially. And you're able to hold as much of it as you like. Not this, everything's a public corporation that, any other grouping of any other of these consortiums can invest in. So I'm thinking of something that's more, like privately held corporations or companies. But then you also have the possibility of doing an IPO, as it were, and just saying, here's what I value it at. And the shares that you release, they'll either be bought or they won't. And other players, as big investor consortiums or whatever, would be able to buy them up. But also, anything that they didn't buy up would be bought up by the market as a whole if the offering price is reasonable. If it's not reasonable, well, nobody should be buying it then. But players might see an advantage in buying those shares that the general market wouldn't. Now, what would happen with the general market shares? Well, again, the share value that you could sell things on the market at would be fixed based on the price to earnings or estimated price to earnings, whatever, as well as other factors like dividends that were paid out. But also, much like in MaxiBourse, another factor that might just be in there is that, quite simply, the stock market is an auction. It really is. Somebody says, hey, I will take this price, and if somebody else is taking that price, I will sell for this price. If somebody's willing to buy at that price, it just happens. It just automatically kind of happens. And that affects the stock price. Now, MaxiBourse is a horribly gameable game. It's not even a fun game. It's so manipulable that it's really ugly. So if a share goes up, you bid a lot, and that sets the current value to a lot, and now your stock value is a lot. In a way, that should be the case, but the truth of the matter is there would be other, on anything that's publicly available, and those are the only things that should be priced, the way I'm looking at it. Any transaction you make that's way out of the market's line, if it's in favor of the general investment public, yeah, they'll take it. And if it's against what the general public wants to do, they just won't. So like something like the XX market kind of makes sense because whatever other players will bid isn't that important. But if the other players own all the, buy up all the shares, well, then the price kind of goes to infinite in a sense, if nobody's willing to sell it. And that's the kind of problematic thing that I see with the market. I'm not sure quite what to do about that. In some ways, I think that, that auction market might not work very well. If somebody wants to auction at a higher rate, they can buy it, but they could also buy it from the general market, and they'd probably pay a premium over the current market price, and the market price would move up. And if they're trying to sell, they would, just like in Star Trader, or trying to think if I've got another. Star Trader is probably the best option here. Just like in that, you're able to, you put a bid in, and if your bid is the highest, you get as many shares as you want at that price. And that will impact the price. It may not impact it as fully, because again, it's still going to be anchored by that price to earnings ratio as well. Now, shares themselves, I had some ideas on this. First of all, 18XX and most of these games have someone who is essentially the director of the company. And that's just the person who owns the most shares usually. That's not really how things work. If you don't have a majority of the shares, then other consortiums could gather together and vote you out and vote in another member. So I can see various ways that this works. One is the shareholders elect who the president is going to be. Now, where does the election go for the shares that are, out in the general public? Yeah, that's an interesting question. I would say if the current president is running the company well and the stock value is increasing, ignore dividends here, but you could include them in things. If they have a positive rating, they're probably not going to get all the votes from the general public. Always going to be some people who don't like you. Always going to be a lot of people who probably are like, well, I only have a few shares or whatever. But some of these might be institutional organizations which would follow that. So some percentage of the general public would just vote in favor of the current president if they're doing well. And they will vote against them for whoever has the most votes, perhaps, in a case where the company doesn't appear to be doing well. And then presidency could shift a lot. Share release. So here's something where, again, the Winsome games do a lot better. In 18xx, any shares that are in the bank pool, look, they're in the general public, they're on the market, those are purchasable and sellable. But any shares the corporation has, those shouldn't be. And my feeling with those is that they should only be released at an action subject to shareholders, perhaps. Like, it might require a shareholder approval to even, to dilute the shares like this. They should be releasable at the direction of the director, possibly with a shareholder vote of confidence on it. That seems... Now, that may all be too modern. I'm not really certain about how these corporations worked, say, in the 19th century. But it feels unlikely that just the director would get to decide we're releasing these shares. So I'm kind of thinking the shareholder meeting could handle something like that. It might also have something to do with major investment choices. Again, how much of the decision is the director, CEO, whatever, and how much is put up for vote and whatnot. That could all be tinkered with to try to reduce complexity or whatever. Now, if all the shares of the company are in other entities' hands, which is what I foresee this as, like the company itself can issue more shares, but that's it putting more of a percentage, it watering down the current share in order to get cash as one option for cash. I haven't really thought too much about bonds here. And there are various different types of bonds that can be released. But if that's the case, you can't just have the I pay out all or none, and even the all half or none doesn't make sense. And the amount that you pay as dividends would be divided by the number of shares that are in external hands, including other companies or whatever. So that just becomes sort of a corollary of the share release concept. That's all I really thought about having to do with the financing there. Again, bonds are generally released with the aid of a large financial corporation, and the financial corporation takes a stake in the bonds, and all kind of complicated stuff going on there. So I'm not quite sure how to deal with those. That would be the equivalent to loans, right? Although loans are different from bonds. You might have actual real loans that are just interest-bearing, but bonds would also be interest-bearing. Now, some bonds are convertible bonds, which would mean that they could be turned into shares. So essentially, you're giving somebody a safer kind of share. But if you go bankrupt, it still doesn't really save them. But it does protect them from market changes. Now, going on to the operational side of things. Here, I'm more tempted towards, and very much, and I've mentioned this at other times, I'm very much tempted to something like Railroad Tycoon as the basis for the game, where it's not just, trying to hook up cities and hit so many cities or whatever. And so trains don't really work the way they look like they work in 18xx. Now, a lot of the Winsome games are just, hey, you got the trains, you don't have to worry about them. They don't really, you don't buy trains, you buy track. And the trains are sort of abstracted away, and that works fine. But I was thinking, if you were going to be buying trains, I don't know that they really make sense as as the sole motivator for progress, which is what they kind of are in XX. And in terms of progress, I'm thinking, like in Railroad Tycoon, now Railroad Tycoon just says, oh, you're at this year, this train is now available. And I don't think that's reasonable either. Rather, I would put additional industries into the game, one of which is the building of new trains. And, you'd have like a research investment in it and whatever. The concept of trains rusting, that could just be put into a maintenance cost. And to some extent, there's no reason you couldn't run really kind of crappy trains, except that their maintenance cost, the cost of running them is no longer worth it. It would be more valuable to invest in a new train. But that would have to be handled very carefully to get that working right. Now, one of the things that Railroad Tycoon has, and it works okay, I guess, because I don't know if it's got a multiplayer version yet, but it's essentially a solo game and a real-time solo game. So the ones that I'm used to, where you have rate wars. Rate wars were a real thing. It was an attempt to like drive a company out of a certain area and get a monopoly in that area. I don't know if I like the idea of rate wars being included in the game or in a game design because of one big problem, which is the race to the bottom problem. What we saw with a couple of games, notably what I covered was business strategy, I think is the one I have. Management was another one using the same kind of mechanisms. It used kind of what the fuck is the game called? Executive Decision. Executive Decision used the same kind of model where you're producing stuff and everything, but you don't have fixed costs in that game. So it worked more like Star Trader in that, okay, maybe I don't make money, but I'm not losing money. The real danger in a rate war is that the corporations lost money during them. They had to work really, really hard to run deliveries as often as possible at low rates, just to make sure that their competition wouldn't get any of the business and that it was no longer worth it for them to keep competing. Now, my feeling is that those could be used to just drive all the competition out of whatever region you're playing in or whatever. And that's the danger to that. And some kind of protection would have to be put in place to handle that. Now, in Railroad Tycoon, the protection is kind of, you can only focus on one of these at a time. I never actually do them because they're hard to do, and I always get screwed if somebody else rate wars me, like one of the non-players, because they're better at doing them. But yeah, basically the number of trains that you would have is how much shit you can push through your tracks and how far. And that's what you would kind of be figuring on. And there would be if you wanted to go with this, there would be a limited market of shit, kind of like in Steam here, where you want to match the amount of crap that you can haul to the amount of trainage that you're putting forward. And there might be advantages, towards bigger trains being able to haul more, and maybe additional cost of putting additional trains on particular track might require a more expensive track to be running too many trains or something along those lines, and that could all be complicated. This is not really a gripe at all about 18XX. This is all missing from all the train games, just like the other thing that I really like in Railroad Tycoon, which is that the growth of cities and industries is sparked not just by the fact that trains are going there and that time is passing like in 18XX. Trains going there, again, the Jonas Jones game, he's done this a couple of times. The more stations that are available in a location, the higher the value of the location, but it also upgrades just due to time, which is how many trains people have bought. I don't believe that's the time factor. I don't believe is horrible, but I want something that's more detailed in the end. But anyway, this is just, I'm never going to design a game, right? I'm just throwing ideas out there for people who maybe want to, and some of these might be of interest. One of the biggest things in operations that 18XX gets wrong is that these train companies own the track. It's more like Crayon Rails or more like the Winsome games here. And maybe you have to pay more to build, or maybe you don't get as many advantages or whatever, to build track that is doing what somebody else's track is doing. So the reasoning behind that is if I'm connecting up a couple of cities, first of all, especially in like the Western expansion and whatnot, in the U.S. and maybe in other countries as well, there were things like this. You kind of see this in Damfrost, for example. Connecting a new city to your rail net, immediately, like, sometimes they would pay you a bonus that was enough to kind of pay off the infrastructure that you had to build to get there. They really wanted it. It would certainly help reduce the costs, which is one reason why, multiple track through one area or whatever ends up being more expensive in some of those games. Anyway, something along the lines of Crayon Rails or the Winsome style games makes more sense than the track that appears in 18XX. However, companies didn't tend to be absolutely exclusive with their track. So at the very least, you would have to have rules to allow players to let other companies run on their track, maybe at a cost that they negotiate. We gotta change batteries here. Now, Rail Baron and Crayon Rails just set a fixed price that everybody pays if they want to run on somebody else's track. That doesn't, I think, reflect the reality. I think the reality was that any of those "you can run on my track" deals were actually kind of spelled out. So now I'm starting to think of something like Blood Royale going on here, where you write, contracts. And this is beginning to sound really kind of clunky. There's no question about that. But you'd write contracts that allow someone else to utilize your track, and maybe you only let their passenger trains use it, or maybe this or that, and you charge sort of a mutually agreed fee for this kind of circumstance, like each train would cost this much. But the amount of trains running on certain track, especially if it's sort of single rail track, that's gonna have some impact various factors, and the biggest one is you might only be able to run X amount of trains unless, you know, unless you upgrade the track more and more. And again, lots of complexity here that might be very, very difficult to represent on a board. Although, you could just have a number on the track, which indicates how much trainage can go through it. But anyway, I definitely think companies should own track. Stations, as they're used in 18XX, really don't make sense. Stations tended to be heavier infrastructure. Companies definitely owned them. Take a look at Penn Station as an example. And utilizing someone else's stations, i.e. entering a town where they built the station there, that might require some sort of payment to the corporation that owns the station. There's again something similar to this in the Jonas Jones game I just played, which is that when, and I had trouble with this rule because, again, I'm used to my XX and this is outside normal XX type rules. If you laid a station in a city, you had to pay every other station owner in that city and every station owner within one city of yours. But this I'm not so sure should be negotiable. If a city is allowing further access into it, and you might have a limitation there a la Crayon Rails where, you know, only 3 corporations can get access and build rails through their city. Because, look, this is going to be done through eminent domain and stuff like that, and there's a certain public want for one rail, probably for a competing rail, but the more rail nets you start putting through a congested area, the less and less willing the public is to put them in there. But if the public is willing to put those rail nets in there, they're going to want to make sure that the station services it, or else another player could get a station in there as well. And stations would also probably have a service factor as to how much can stop there for loading and unloading, for passengers, all that kind of stuff. But yeah, essentially stations would probably, that might be a fixed fee or a fee based on the city or something like that, where if the city is letting you build track in there, then they will enforce you having to, as the station owner, having to service the trains that are going through there. But they also realize that they can't just, you know, it's not going to be a freebie thing, but it might be a rate that is set based on various factors relating to the city. One of the things that is purely 18XX is the actual track. Now, I'm someone who hates the angular track, and I know somebody's going to tell me the name of it. I will never remember it. The games that I'm used to had curved track. Curved track only allows you to travel in the direction of the curves. You can't make a sharp turn that's like, you know, more than 90 degrees, well, more than like, I don't know what. but certainly not. It's certainly less than 90 degrees that you'd be allowed to make a turn on. And if you think about how rails are built, that all makes sense. But then when you think about how systems of rails are built, it doesn't. Because when systems of rails are built, when it's not just, a single track going through an area, there are going to be switches, there are going to be I don't know what to call them. I want to say off ramps. It's not the word for it. Sidings, where you can park a train for a little bit, and there's going to be capability beyond the complex in the city sort of wheelhouses or whatever they're called that allow full turning trains around in very, very tight constraints. Look, no matter what, rail yards are going to allow for a lot of capability to shift the direction of trains and everything. And there is absolutely no problem, as long as you're not trying to do it in an incredibly tight space with significant infrastructure to be able to not just follow the curve. So the angular track is more realistic and more believable, much as I don't like it. Why don't I like it? Well, because in 18xx, it opens up far too many routes. But I'm looking at a game where you're not counting your routes every turn and redefining them. The routes are kind of fixed in. And this is something the Winsome games kind of do, which is once you connect something, its valuation is just added to your stock value or whatever. And then you never have to pay attention to it again, right? The one question I have is with trains deteriorating and also just becoming completely obsolete. That is a factor that has to be taken into account. And I want to return to that for a moment at least. Because as more modern trains started appearing, companies took perfectly functional trains and destroyed them or just junked them. And there has to be some sort of mechanism that makes companies want to do that. But I'm not convinced that those perfectly functional trains had to be destroyed. I.e., if a corporation didn't have the money to invest in new trains, it could have still run and maybe made a profit off of those shit trains. I'm not sure what those mechanisms would be. Anyway, there's just some ideas that I was throwing around. I felt like I wanted to discuss something having to do, focusing on, hey, what does XX not really get right, and where would I want it to kind of go? And I think I want it to go to not be 18XX. And the truth of the matter is, I probably still like 18XX better than whatever the sum of these ideas is. Just because it provides for a platform of a very rich environment of choices that maybe doesn't get everything historically correct, but that the compromises you'd have to make for historical correctness are the greater abstraction that the Winsome games tend to have, or such a cluttered, messy attempt to produce some sort of realism. I think there's room for something that would still be playable and fun. but not to the same amount of people as say play 18XX. And there are people who do not like XX because it's already too complicated. And this would definitely be a heavier, more complicated, probably more tedious game with all these ideas in it. But I think it's an interesting facet. I haven't seen stock markets done right yet anywhere, and I have not seen the rail operations done in the detail that I want them done outside of a computer game. But maybe a computer game is the best place for all of this stuff. Even Railroad Tycoon, I feel like it's not doing enough, you know. But I want something where I can tinker and play and fiddle with the pieces and all that. That's just the nature of how I am. Anyway, I thought I'd chatter about that for a while. I don't know, I might have other ideas. I'm trying to avoid shopping. But I think I've succeeded today.